About your audio.
Okay,
It is relatively clear, but I think it can be better.
Just give me a minute. I try to change.
Thank you. Thank you so much.
Okay.
So even as our panelist, Mr. Andrew Wanjiru, who is a senior manager at PwC Kenya, is actually checking his audio, I'd like us to be aware that we are dealing with matters turnover tax, and we are currently streaming live on KRA TV. In fact, I'll get one of our media team to just post on the chat box the link through which you can access this particular session. You can invite those of your spheres, your community, your friends, your colleagues to stream live and even be able to ask their questions from KRA TV. The particular link will be shared shortly. Andrew, when you're ready, we are ready when you are. Okay. Even as we give him time, thank you for your questions. As he's adjusting his audio, it's very important for him to get the audio right so that we can benefit as much as possible from his knowledge and his expertise and experience. We have questions that are streaming in. I'd advise as many of us as possible to ask your questions on the chat box. One question from Samuel: we sell airtime and earn a commission of 4% of the value of the airtime sold. Do we compute turnover tax on the value of the airtime sold? Do we compute TOT on the value of the airtime sold or the commission? And okay, that's a good question. Thank you for your question. Andrew is saying, by the way, I missed previous sessions. Do you host them somewhere? Yes, indeed, we host. We host them on the KRA website. We've said we have shared the link on the chat box. Yes, thank you very much, tax education team. They've shared the link on the chat box. Just click on that particular link, Andrew. You should be able to find all our other previous sessions. Okay.
Hi, Brenda. You can hear me? Is this
perfect?
Better?
Perfectly. Whatever you did has worked 100%.
Okay. Yeah. Sure.
Yes.
Thanks.
Okay. Please proceed.
All right, great. So as I'd mentioned, the Income Tax Act under Section 12C does provide that a person who is resident in Kenya is the one who is supposed to pay turnover tax. And so I defined who a resident person is. And so I think what I wanted to largely mention is who a resident person from an individual capacity means, or a natural person. So you are considered a natural or an individual who is resident in Kenya if you meet three specific things. One, if you are permanent in Kenya, you have a permanent home in Kenya, and you are present in any number of days, even one. Or you do not have a permanent home in Kenya, but you're present in Kenya for an aggregate of 183 days or more, or you're present in Kenya for more than 122 days in each year of income, looking at the current year and the two preceding years. So essentially, or in a nutshell, turnover tax is payable by a person who is resident, and there are, of course, rules to determine who is the resident person and who is not.
All right. Thank you. Thank you so much. Let's take this conversation to another level now. So let's talk about turnover tax in terms of the rates and the percentages. What is the threshold? And then what is the percentage?
Good. Thank you very much. Now, the Finance Act 2023, which is effective 1st July of 2023, did provide some amendments to Section 12C. And one of the provisions that came through the Finance Act was a change in the threshold, and then the other one was a change in the rate. Now, for the threshold, we are looking at a person whose income is between 1 million and 25 million shillings during any year of income. So that is one thing that you should be aware of in terms of you as a business. So if you are within that specific threshold, then it means that then you are required to be registered for turnover tax. Now, in terms of the rate also changed from 1% to 3%. So essentially, then the rate of turnover tax is 3%. And so essentially, then you're looking at two things: the rate, which is 3%, and the threshold, which is between 1 million and 25 million. So, Brenda, over to you.
Thank you, thank you. And just a follow-up question now that you've talked about the changes in the Finance Act. Considering the changes, maybe you can let us know what were the previous rates, and let's talk about what impact does this change have with for businesses whose gross turnover are above 25 million. What does it mean for them now?
Great, thanks. Now, prior to the Finance Act coming into play, the threshold was between 1 million shillings and 50 million shillings, and the rate of was 1%. And this 1% was enacted by the tax laws, was brought into force by the Tax Laws Amendment Act, number 1 of 2020. That was during the COVID period. So before 2020, it was actually 3%. So what has happened is we've just defaulted back to the 3% rate that was there before. Now, if then you are above 25 million shillings on a go-forward basis, then it means then you are subject to corporate income tax, which is another form of income tax, which you would ordinarily then be computing and paying on an installment basis. So if you are if you have turnover of above 25 million shillings every year, then you would ordinarily then be required to pay installment taxes, and installment taxes are computed and paid on the fourth month by the 20th day, also by the 20th day of the 6th month, as well as the 9th month and the 12th month, and then a balance of tax after the end of the fourth month after the financial year end. And then you file your annual income tax return 6 months after your financial year end has ended. So it just means then it is important for you to be aware of your threshold. But maybe at this particular point, I could also mention that if you can elect not to be subject to turnover tax, in which case, if you elect not to be subject to turnover tax, then you are definitely subject to corporate income tax, which is the other form of income tax I've mentioned. Brenda, I don't know if I've captured your question, but happy to provide additional detail.
Yes. Thank you. Let's bring it home some more by answering a question that has been asked by Samuel. Maybe we can use this case as an example just to deepen our understanding. Now, Samuel says, and this is the question that is on the chat box. I can read it out so that you can from there just give a response. He's saying, we sell airtime. Okay, that is the nature of the business. Out of the airtime that he sells, he earns a commission of 4%. All right. So then his question is, how does he compute turnover tax? Is it one on the value of the airtime that he has sold, or is it in the value of the commission, the 4% that he has earned?
Great. Thanks for that. Now, it depends on how he books revenue in his accounts, because the way turnover tax is imposed, we would ordinarily look at the turnover. And so it depends on what exactly is booked in the financial statements as turnover, and that is dependent on IFRS and other accounting standards on how to record revenue. So the revenue that is booked in the top line as turnover, that is the basis on which turnover tax is computed.
Can you break that down kidogo for a layman? I'm sorry.
Yeah. So
for those that don't understand the accounting languages.
Yeah. So it just essentially means that if you have an airtime of 10 shillings that you are selling and you get 4% of that. Yeah. So you have two numbers. You have 10 shillings as the value of the airtime, and then 4%, which is a commission you book, is 4 cents. Now, when you go to your financial statements or your statement of income and profit, different people would book different amounts of income. There's one who would book 10 shillings as their top line. There's another one who would book 0.4 cents or 4 cents as their income. So now the person who was booked 0.4 cents will actually be subject to turnover tax based on that 0.4, and the one who has booked the 10 will be subject to tax based on the 10. Now the determination on how much to book between 10 shillings and 4 cents is actually determined by different accounting policies. So there are accounting standards that define what exactly is the amount of revenue you should book. So I think the question I would go back to the person who asked is what exactly do they book as their turnover.
Okay, all right, all right. Thank you for that. I know the asker of the question, you've said there's such a term. Samuel is the one who's asked that particular question, and we'll give him an opportunity just to tell us whether or not he's okay with that particular question. But it leads me to the other question: is in turnover tax, is it a final tax, or is someone supposed then to account for it, say at the end of the year? How is it treated?
Yes, so it's very simple. It's a very simple tax, and what essentially it means is that once you pay the 3% at the end of by the 20th day of the following month, then it means you have no additional obligation in terms of payment of additional taxes at the end of the year. So the tax period is a calendar month, and therefore it could be considered as a final tax.
For the layman's, let's say, let's move away from the corporates a bit and just talk about people running sole proprietorships, MSMEs. So in terms of understanding of a final tax, maybe you can break it down for them and just let us know what does it mean to say that it's a final tax.
Great. Thanks, Brenda. So as I mentioned, there are usually different ways of making payments from a tax perspective. One example is employment income, which I'll use. So for employment income, what you'd ordinarily do is the employer
Sorry, we lost you a bit, Andrew.
is or at the end of every month is paying VAT, for example.
Yeah? Andrew, we had lost you a bit. I don't know whether you'd want to take that again from the top.
Okay, sure. Now I'll take that again. Yeah. So we are talking about two examples, which I just want to use to contrast between final tax and tax which is not final. Now, one example is somebody who is paying turnover tax at the end of every month. So every month they compute 3% of their gross receipts and they remit that to the revenue authority by the 20th of the following month. So that specific person doesn't have an obligation to make any additional payment in relation to income tax, or neither is there an additional obligation to make a return or file a return at the end of the year. Now, that is considered final tax, as opposed to somebody who is earning, for example, management fees or professional fees. For example, an accountant who, when you are making payment to the accountant, you deduct a portion of tax, for example, 5% of the gross payment you are making to them if the payment you are making is more than 24,000 shillings. And then that specific deduction that you make is called withholding tax, which the accountant at the end of the year is going to make a top-up payment to the revenue authority, such that when you add the tax you are deducted plus the tax that the accountant will pay at the end of the year has to be equal to 30% or has to be adjusted again. So for turnover tax, the reason it's final is because there is no requirement for you to pay top-up tax at the end of the year. And I think, Brenda, that's how I'd tackle that one.
All right. Thank you. Thank you. I can see follow up questions that have come based on just what we have discussed. I see Dickens Otieno here is asking, so do we take turnover tax as a cost of sales, uh, or it's now expensed as part of business expense? I don't know if that question makes sense to you, Andrew, by Dickens Otieno Odira on the chat box. He's saying, so do we take turnover tax as a cost of sale, or it's now expense as part of business expense?
No, yeah, I can get where Dixon is coming from. I think when you're looking at how to book turnover tax in your books, it shouldn't go as a cost of sale because it is not directly linked to your to the goods you're selling. So, for example, if you're selling a laptop and the cost of the laptop is you bought it for 800 shillings and you sell it for 1,000 shillings, then the cost of sale in that example is 800 shillings because for cost of sale you look at something that is a direct link to the source of your revenue. But for income taxes, there is, as I mentioned, additional criteria that you'd ordinarily look at to know how you expense it, but it would ordinarily be an expense line just below your profit before tax. So you'd have your income, that's revenue less expenses for you to get your gross profit, and then you'd add less operating expenses for you to get your profit before tax, and then you'd have your taxes. Then you get to your profit after taxes. So I think Dixon sort of understands that logic that I've tried to explain because I think he's also an accountant. So if it is a
Yes.
little bit complicated, maybe
All right.
hopefully, yeah.
All right. Okay. Thank you. I'd want us to continue with the conversation, but let's just see clarity. Godfrey here is saying the response about the airtime for him sounds a bit confusing. He's asking what then is the correct amount to subject to the TOT? Is it the commission or is it the total amount sold? For those that are not accountants or even run limited companies, let's say they have a business name registered as sole proprietorship. For him, Godfrey, how would you break it down in a manner that he can understand?
Yeah, Brenda, as I said, there is no specific answer to that question. It is dependent on how has he assessed his top line or his gross receipts as. Now, if based on the accounting principles and accounting standards and analysis is done, the revenue that should be booked is 10 shillings for each accountant, for each receipt airtime that he sells, then 10 would be actually be the basis. And specifically, that schedule of the Income Tax Act talks about gross receipts. Yeah. So it also goes to a question of how exactly does he sell an airtime for 10 shillings and only get receipts of 4 cents, that is 4% the commission, or does he sell an airtime for 10 shillings and then later pays maybe a telco the 10 shillings that he sold. So it's I think that is something that we can pick offline to just understand him specifically, because there are some business nuances that would definitely need to understand a little bit in terms of how he operates before we can give a definite answer.
Thank you, thank you, thank you. Let's just finish with this question and then we go back to the conversation. Are the expenses incurred
For
to
10
generate
shillings and then
turnover
later pays
deductible
maybe
against
a
turnover?
telco? The answer is no, and that's why it's called turnover. It's based on the top line. It's based on the revenue, and it's usually 3% of the gross receipts. So you only look at the revenue, and there are no expenses that are allowable when computing turnover.
Thank you, thank you. Now let's talk about VAT and turnover tax. I think let me give you an opportunity just to discuss VAT and turnover. Can somebody have both obligations, and who is eligible for VAT and how is it related to turnover tax?
Now, I think, as I mentioned initially, there are different tax laws. One is the Income Tax Act, where the turnover tax is imposed, and then there is a VAT act as well, on the other hand. Now, the value added tax provides criteria on registration of VAT. And when you look at income tax and VAT, those are two different taxes. So for turnover tax or income tax, that one is actually based on the income you have. But for VAT, it's actually based on one, do you meet the criteria to be registered for VAT? So one of the criteria for you to be registered for VAT is, are you making supplies which are subject to VAT? And those supplies are in excess of 5 million shillings a year. If then the answer is yes, then you should register for VAT. And how VAT operates is, when you are making a sale, then you charge your customer 16%, or depending on the type of product. Now, then you remit that to KRA on a monthly basis. So VAT is really not your specific tax. In most cases, what you would ordinarily only do is be a collecting agent. Now, contrast that with turnover tax, which we are getting from your specific income. Yeah. So it is important then to make that distinction, that for VAT, you are a collecting agent, and for turnover tax, you are actually paying from your specific income. So it is possible for the two taxes to coexist, because they are not taxes on, they are not, you're not taxing the same income twice. Brenda, I don't know if that is clear enough.
Yes, it is clear, um, especially in relation to the threshold when you talk about turnover tax and VAT. That aspect of, can one have both tax obligations at the same time, I think needs to be very clear for our taxpayers. And you can just reiterate that. Is it possible to have both at the same time?
Yes, it is possible. And the reason it is possible is, assume you have gross turnover of 20 million. Now, that means you are within the turnover tax regime, because you fall between 1 million and 25 million. Now, contrast that on a VAT perspective, where VAT, from a VAT perspective, you have now you have sales that are more than 5 million, and therefore you're subject to VAT to the you're subject to you're required to register for VAT to the extent that the 20 million sales are taxable supplies. So that is the rationale of them coexisting together.
All right. Can we talk about withholding tax and turnover tax?
Okay.
Is it possible for someone to have both or not? Just talk about those two tax obligations.
Yeah. So the Income Tax Act has provided certain exemptions, or certain incomes which do not are not subject to turnover tax. One is rental income. The other one is professional fees or training fees, or any income which is subject to final withholding tax. And so, for example, dividends, if your income is only dividends, then you are not supposed to pay turnover tax on that. Or if you are providing professional services such as an accountant, then your income is not you should not subject it to turnover tax. Or if your only income is rental income. And the reason for that is because withholding tax is already being deducted or accounted for under the other sections of the Income Tax Act. And so turnover tax is usually mostly applicable to people who are in the business of selling tangible goods. And so that distinction needs to be made clearer, that you only pay turnover tax if you have any other income other than income which is rental income, professional fees, training fees, or income which is subject to final withholding tax. So I don't know if, Brenda, that is clearer, or you want me to elaborate further.
Yes, that is clearer. In fact, let's just give more clarity to our taxpayers. So how does a taxpayer who has a small business determine whether to pay turnover tax or income tax?
Yeah, so there are several criteria. One is the threshold. That is where you start. So how much am I making in gross turnover on an annual basis? Is it between 1 million and 5 million, 25 million shillings? The answer is yes. Then automatically I'm in turnover tax regime. Then you go to the next hurdle is what is the nature of my income? Is my income rental income? Yes. Then I'm not supposed to pay turnover. Is my income professional fees? Yes, I'm not supposed to pay turnover. Is my income training fees? Yes, then I'm not supposed to pay turnover. So there's a like a waterfall like a chart that you'd ordinarily be looking like you'd ordinarily be looking at. Yeah. And so the first one is the threshold, and then the next one is looking at the type of income that you should be that you have. So Brenda,
Yes.
I don't know. Yeah.
Thank you. Thank you. Thank you very much. Next question. So, for those who are eligible for turnover tax, how do they register?
Great. So nowadays, the Revenue Authority is quite clear in terms of registration processes and guidelines, and all that usually happens in iTax. So what you do is just log in into your iTax profile, and then therefore just examine or make sure that then you amend your PIN obligation. The default previously or currently, even currently, is when you get your PIN, you would ordinarily then be asked to confirm. So if you are a new business, you can confirm the nature of income tax that you want, whether you want the corporate one or you want the turnover tax one. But if you're already registered under the income tax one, so what it would mean is you'd have to log in into iTax, amend your income tax details, and choose turnover tax, after which the Revenue Authority has to approve.
And just a question from what you've just talked about. Party K is saying, is it possible to opt
Yes.
paying corporation tax when turnover is between 1 million to 25 million, or is it just mandatory to pay TOT?
It is not mandatory. You have to, there's a notice that you have to address to the commissioner. So you just write to the commissioner, you tell them I'm between 1 million and 25 million, but I would want to be taxed under corporate tax regime. So it's possible for you to elect not to be subject to turnover tax.
So that brings me to my next question. So does turnover also apply for limited liability companies? Does it also apply for partnerships? Maybe you can give that clarity.
Yes, from a turnover tax perspective, the criteria is really not the vehicle in terms of the legal vehicle. It's really looking at are you a resident person? Are you getting turnover from a business that is and the nature that excludes the income that we've talked about, and are you within the threshold? So even limited liability companies could also be subject to turnover tax.
Right. Salim is asking, what if your threshold is below 1 million?
Now, below 1 million, the law has not expressly provided for such tax rates. So it's when you're preparing your income tax return, you'd ordinarily find that either there is an exemption that comes into play in terms of the taxes that are due, or you'd find that if you have other sources of income that you'd aggregate, you could still be in a tax payable position.
Thank you. Thank you. Philip McKenney is asking, maybe just a clarity. If you have the VAT obligation, okay, at the same time, you have turnover tax. Now, TOT is final tax, and you don't declare the same on the annual returns. Then, won't it have inconsistencies in the case of KRA audit, where they majorly base on sales declared in the VAT return vis-a-vis the sales declared in the annual returns?
Thanks for that. But remember, for when you're in turnover tax, you don't really need to file an annual return. So, because it's a monthly obligation. Yeah, the tax period for turnover tax is a monthly return. So what KRA will do then is take all your 12 turnover tax returns and then take all your 12 VAT returns and then compare the turnover. So they'll only query you if you have, if those two returns are different. So Brenda, I think that's how I would respond to that one.
Thank you. Thank you so much. I know we are really pressed for time. And here I just need to ask our panelists. I know it's almost 3 p.m. and you have another engagement. How would you want us to proceed from here? Would you want us to take a few more questions or would you want us to just give a summary? I'm sorry for that. I think I was mute in between the session. I was asking, would you want us to proceed a bit or do a conclusion and allow you time to join another engagement, which I know you should be joining in the next few minutes?
No, I think we can continue up to like 3 or 5. I don't mind for with the questions. So then it's
Or
beneficial to the attendees. Yeah.
Thank you, thank you, thank you so much. All right, so without much ado, let me just go to the question. I think this question has really come up a lot. I see Andrew is also asking the same question. So, if the threshold is below 1 million, is it that they are subject to income tax instead? And I see Andrew asking the same question. What tax are you subject to if your revenues are 1 million and below?
So it is income tax, yeah. And the reason for that is really there is no specific exemption in the Income Tax Act that provides that you should be exempt when you have income of less than 1 million shillings.
All right, all right. Thank you. Thank you very much. Thank you. There's a question that came much earlier that I want us to take that I know I had not read. Let me just go up a bit. Yes, I think we took that question. All right. So Dennis was asking, but I think you had already alluded to it. What happens if I make sales for a particular year that is more than 25 million? What happens to the sales that are more than 25 million? I think you had responded to that, Andrew.
Yes, I'd mentioned that if your gross turnover is more than 25 million, then you are taxable under the corporate income tax regime, which means you should be paying your taxes under the installment tax method, where you compute installment taxes and make a payment before the 20th day of the 4th, 6th, 9th, and 12th month, with a balance of tax payable at the end of the 4th month after financial year end, and an annual return due by the end of the 30th day of the 6th month after your financial year end.
Thank you. Thank you so much. I've actually seen the question that I wanted to ask by Stella Wamboy. She says, we do sell plots. Hence, our gross sale is above 25 million. So we had requested for the removal of TOT obligation, but upon removal, it affected payee. Since payee was also removed, what is the relationship of the two? And how can you remove turnover tax and maintain the payee obligation? I'm particularly interested with the part where she says they were selling plots and the gross sale were above 25 million. Should that be subject to turnover tax?
Yeah, essentially it should not be, because that is it's already above the threshold. But there is really no specific relationship between turnover tax and PAYE. So because those, as I mentioned, those are different taxes. So it's important maybe to just check how maybe there was an error or an issue, or is inadvertently selected both. Yeah. So yeah.
Okay. All right. I think, Stella, you can get in touch after this so that we can be able to assist you further. Andrew, for those selling property, land, do they qualify for turnover tax? I'm sorry to revisit this question.
Yes. So the exemptions for turnover tax are One, if you are not within the threshold, you are not between 1 and 25 million, or your income is rental income, management fees, professional fees, training fees, or income which is subject to final withholding tax. So those are the only people who are exempt from turnover tax.
All right. So then, is it possible for one to pay for both turnover and capital gains?
Now, those are also two different types of taxes because uh, capital gains tax is imposed on property, yeah, disposal of property. And for example, if you have a building and or a piece of land, and then you sell that specific piece of land in a way that it is not your main source of business. So if you are in the business of selling land, then whatever you sell or the income you get from selling that land is actually your main source of income. And so for that reason, it falls squarely within turnover tax. But if I am in the business of, say, um, what if I'm in the business of I have a small shop which I sell, I'm a retail trader, and I have a small piece of land somewhere, which to me, I that's not my specific source of, or it's not my day-to-day business. Then that specific piece of land, when I dispose it, to the extent that it is not exempt from CGT, then it would be subject to CGT. So capital gains tax and turnover tax are different, but it's possible for one person to sell land and another person to sell the same piece of land, but both of them are taxed differently. One could be taxed under turnover and the other one on capital gains. And the reason for those two differentials is because you always have to look at the principal core business of that specific taxpayer.
Well answered. Thank you so much for that, Andrew. Let's take this very quickly before we take our last question from Karen. So, in terms of turnover tax, when is the due date in terms of filing the returns for turnover tax? That's one question. And then, what are the penalties and the interests in terms of failure to pay and also to file for turnover tax?
So a person who is subject to turnover tax should submit a return and pay the tax due to KRA on or before the 20th day of the following month at the end of the tax period. So right now, today is August 31st. So turnover tax for August is due 20th September. If you do not pay by 20th September, then you are subject to penalty of 5% of the tax due and 1% interest per month or part of a month that the tax remains unpaid. And now, essentially, on a go-forward basis, there is no waiver of penalties and interest, and so that means that whichever amount of penalties and interest you incur, you'll have to pay that.
Thank you. Thank you so much. So now let me just pick specific questions from our taxpayers, even as we are closing. A question from Patrick. He says, the notice to opt corporate tax is valid up to which date after the implementation of Finance Act 2023? I don't know if that question makes sense to you.
There's really no validity because Section 12C2 of the Income Tax Act definitely provides for you to write to the commissioner to the extent you do not want to be subject to turnover tax. So there is no validity period for the notice.
All right. Karen is asking, I had asked, okay, this is her question. She left employment in the year 2022 and started her own business. She therefore does not have any pay credits for the year 2023, but she has the turnover tax obligation. Now, when she is doing her annual returns, that is at the end of this year, next year from January 1st, how will she compute her returns?
It depends first on the level of the amount of income. If she has been paying turnover tax and on all the sources of income, then there is no obligation. And then it also just depends on whether she's working as a sole proprietor or she's actually in a business. So if she's in a registered separate entity, like a company limited by guarantee or company limited by shares, then in that case, her return will be based on the other income she gets from her specific business, which may be with salary or anything in that line. But if she is trading as a specific business trader, or she's trading as an individual through a business name, then it means the turnover tax she is paying should be final tax, as I mentioned initially.
All right, I only have a minute to go. Question here, just two questions, and then we are done. One question is, how do I opt out of turnover tax, or how do I cancel that obligation? And then a question by Salim: we are selling clothes and are planning to open a second store in another location. So, am I supposed to combine the turnover of both these stores and pay for TOT?
Yes, to the extent that the businesses are, it's one source of income. So turnover tax is not based on a department or a section of your business. It's based on the entire turnover. So if the shop one is a different company and shop two is a different company, then you look at them separately. But if both of them are under the same business name or under the same company, then you treat them as the same. Then the other one, the question is, how do you opt out? As we said, you opt out through iTax by amending your KRA PIN details through iTax.
Right. I think the time you had allocated us, Andrew, is up. I would like to keep time as we had requested. I know there's a lot to say, but maybe you can talk to our taxpayers and give your closing remarks. Talk to them in as far as what you think is important for them to know, especially after the change of the Finance Act, but also please give your closing remarks.
Okay, thanks, Brenda. I think we've said that turnover tax is payable if your income is between 1 million shillings and 25 million shillings during any year of income. You pay turnover by taking 3% multiplied by your monthly income, gross receipts, then pay that to the Kenya Revenue Authority by the 20th of the following month, failure to which you will incur a penalty of 5% and interest of 1% per month. You do not pay turnover tax if you are beyond that threshold, or if you have elected to be exempted by writing to the commissioner, or if your income is a rental, management, professional fees, or income which is subject to final withholding tax. I think that said, it's important for you to keep abreast and make changes to your specific iTax account if you are within that threshold, because the Revenue Authority was really invested in ensuring that then iTax applications are also processed in terms of admission or deletion of turnover tax applications. And I think for that specific reason, at that specific point, I would also want maybe to end at that point. Thanks a lot, Brenda, for having me. Happy to provide any additional clarity on questions that come maybe thereafter. And I do wish you a great afternoon ahead.
Thank you. Thank you so much. I know we have to release you to attend to other engagements, but we surely appreciate your time. Come on, let's just appreciate Andrew for the time that he's given us and the question that he's been able to answer. You can comment on the chat box, and you can even share an emoji, a thumbs up, a clap. Just let's appreciate him for making time to respond to a question in a very able manner. We are very sorry that we know the time has been quite limited for us. We have tried to tackle as much as we could within the short time that we have had. Salim, thank you for your thumbs up. Karen is saying, thank you, Andrew. Much appreciated. Charles Kioko. Wambua is saying, thank you all. Mercy Wanjiku has her thumbs up. Afrodane saying that has been good. Nelly, thank you. Mercy Wanjiku, thank you. Alex Chalo Muli, Grace Karanja, thank you very much. Thank you. I think all this are just going to show how much they appreciate your time and the questions that you have answered. Andrew is saying thank you for your time. Brenda and Andrew, you're most welcome. Tanil, thank you for your questions. I know there must be, we release you, Andrew. Thank you so much for your time. We are looking forward to having yet another engagement. For those that may have joined in a bit late, let's just remind you who Andrew is. He's a senior manager with PricewaterhouseCoopers, that is PwC, right here in Nairobi. He has over 7 years experience in tax matters. He holds a Bachelor of Commerce degree from Kenyatta University. And he also has an advanced diploma that is in international taxation from the Chartered Institute of Taxation in the UK. We have benefited much from your experience today, Andrew, and we are very grateful. We are planning to hold more sessions moving forward. I know you must have heard him mention that based on the Finance Act 2023, we do not have waivers. But there's very good news coming to taxpayers from the month of September. Starting tomorrow, stay tuned to KRA channels on the new the news that is going to come out very soon on tax amnesty that is being granted by KRA, so that you find out how you can take advantage. It's coming up, and we will be giving you a lot of information very soon. Remember, the amnesty period is between 1st of September 2023. It shall run all the way to the 30th of June 2024. You can take advantage of the amnesty, and the details will be shared with us. So keep it right here, keep it KRA TV, and you'll be able to find out more as we continue. Wow, time is fast spent. I know we had planned to have 2 panelists today, but Mr. Ombasa Kiame was not able to join us because of matters that arose and a very short notice. And so we had Mr. Andrew Wanjiri taking us through very ably. And I hope for that very short period of time, you've been able to glean as much as possible and get clarity for some of your questions. So that's it from me and the tax education team. We are very grateful for the time that you have given us. Remember, if you have questions, please visit our KRA website and go to KRA TV. You can be able to revisit prior sessions that have been done, or you can ask through our call center. All our handles are available. We will have our team just post the link again to you so that you can know where to go. Call center, you can get us through Twitter space, that is at KRA Care. You can get us through emails, that is callcenter@kra.go.ke, and our telephone numbers are available and our contact details in the KRA website. So, well, that is it from me. Thank you so much for your time, and let me wish you a very good afternoon. I want to call one of my colleagues to close for us with prayer, and we will call it a day.
Let's pray. Our dear everlasting Lord, we come before you, dear Lord. We thank you and we glorify you for the day of today. As we have ended our meeting, oh dear Lord, may everything that we have learned today, dear Lord, be of benefit to us. We glorify you and we honor you. It is in Jesus' name we pray and believe. Amen.
Thank you so much, Judy, for that prayer. Thank you for all the sentiments that I can see in the chat box. Stephen Malonza saying, thank you so much, Gitao. Thank you. There is Neo Sealand Regional Freight Limited saying, thank you. Abel is saying, very elaborate. Thank you. Deacon Sutieno, it's been great. Thank you so much. God bless you. More presentations on the same. Indeed, we have taken note of that. Stephen Malonza is saying, thank you. Nice presentation. And Tanil is saying, can we have another training on turnover tax? Yes, indeed, we will have one. And Silas, together with many others, just appreciating the session that we have had today. Remember, every Thursday at 11 a.m., we have virtual sessions happening without fail. So you can make sure you look out for the links that we'll be sharing on our socials for you to join our sessions. Have a very good afternoon. Thank you.